Look, there's big picture things. I covered gold in the update that I did, which is right now you don't know who owns what assets. You don't own anything because the government's taken it away from you, which is we've kind of known, but it's been writ large in the last few weeks. And I think even though gold is coming off because it had a good squeeze higher, I think we're going to see more action there. The one to watch, I think, is the dollar. The dollar is really important, and the dollar is very strong. I do expect the central banks to try and slow it down at some point, but the dollar going up basically creates credit issues for the global economy. We've already seen places like Nigeria running short of dollars. We're seeing it in Sri Lanka. We're seeing it in the periphery. It always happens in the periphery first and then comes back. So there is liquidity issues further out in the system. So just keep an eye on the dollar. The more the dollar goes up, the more liquidity issues you're likely to face, and the world struggles a bit. So just keep your eye on that.
Basically, this notion of what's happening with the dollar keeps rising. Give us your context on that and how it ties in with what we just heard.
So this is going to tie back to Bill Tai as well. So Bill Tai talked about petrodollars and electrodollar, and that crypto is the electrodollar based around electricity, while the petrodollar was based around supply and demand for oil. So we've been in a petrodollar system since we floated off the gold stand. Now, what does that mean? It meant that the US was one of the biggest importers of crude oil in the world, if not the biggest import. So they would spend dollars, and these dollars floated around the global system, keeping it liquid. But the shale oil revolution, as Russell points out, did the opposite. It meant that the US didn't need to import as much. Yes, it has to import some different grades of crude and stuff like that, but generally speaking, it's self-sufficient in oil. So that is a lot less dollars into the global system. So if there's a lot less dollars in the global system, the dollar goes up. It's like ETH burning. It's like Bitcoin supply. There's less dollars sloshing around the global system because the US aren't spending it. It drives the dollar higher. And that's one of the things that the dollar's strong for a period of time.
And the question is, would love Raoul's thoughts on precious metals and commodities in the near and medium term.
I understand the thesis. People like Tracy Shuchart talks about, Tony Greer, that there's a big commodity supply issue and a reasonable amount of demand. I think the demand side of the equation will be weaker going forwards. I get the structural issues. I don't like owning commodities in spiky markets like this where you get news flow and it falls 20% overnight. I think that's hard. Commodity producers, maybe you've got a better opportunity, but they've been very spiky. So if you're not in the trade, it's not a trade I can enter now. The pressure, and are we in a commodity super cycle? The answer is I don't know. It's possible. We're due one at some point. I just don't know where the demand side of the equation is, except for ESG demand. So I can see the copper side, the nickel side. There's a whole bunch of these things that are very important in that. And so, with this reduced supply and normal demand in crude, I can understand the prices might remain high. Yeah. Precious metals, as we talked about, in a world where money's getting confiscated, in a world of inflation, of a world of geopolitical risk, it's got to be good. I mean, gold made a new high, backed off it. It probably consolidates for a while. And then if I look at the long-term chart of gold, particularly the inflation-adjusted charts of giant cup and handle formation, and my guess is gold goes to 2,500.
Yeah, really interesting. I was actually thinking about this earlier. It's like the Tony Greer trade and the Cathie Wood trade. I think they may both be right, just on different time horizons.
That's always the case. That's why I find it ridiculous that people insult each other for, I'm a commodity person, that's a tech person, those guys are idiots. It all worked in the right way at the right time. I've been waiting to buy these blown up tech stocks ever since I talked about the exponential age thesis. I've not bought any of them because they were 2 standard deviations overbought versus the log trend. And I've been waiting to get to 1 or 2 standard deviations oversold. And lo and behold, that's where we are now. So I'm kind of looking at them very actively and looking for a change in the macro to buy them.
Yeah. By the way, talking of Tony Greer and Tracy Shuchart, we did a terrific Real Vision Twitter Spaces yesterday with those two. Had a couple thousand people join us.
Yeah, I mean, they're both amazing. Love them both.
What's so creative about that? Every day I hear this word, every sentence. Well, that is not true in the financial markets. When I founded ARK in 2014, this was considered a crazy idea to focus exclusively on disruptive innovation. Now, disruptive innovation to us means something very specific. It needs to meet, in order to become a part of our platform, the disruptive innovation needs to meet 3 criteria. 1, a learning curve, so technologically enabled innovation, a learning curve characterized by Wright's law. And I'll just rattle that off quickly. It's a relative of Moore's law, Moore's law is a function of time, every 18 months to 2 years. Wright's law is a function of units, and it says, this was from the airplane manufacturing days, the new technology of the day, for every cumulative doubling in the number of units produced, so 1 to 2, 2 to 4, 4 to 8, for every cumulative doubling, costs associated with each technology decline at a consistent percentage rate. So in the DNA sequencing space, that number is 40%. And that's for short read DNA sequencing. In the long read DNA sequencing space, it's 28%. In the battery pack system, we're known for Tesla, it's 28%. That's for the EVs themselves, it's 15%. So first criteria is Wright's law. Second criteria is that the technologically enabled innovation has to cut across economic sectors. We have to believe it will become mass market because it applies to much more than just one sector. And then the third characteristic is that it is a launching pad for more innovation.
How will the continuing supply chain snarls impact crude, other commodities, and inflation?
The answer is I don't know. I'm not the expert. I've not been focused on the commodity trade. Again, Tony, Tracy, others like that have been all over that. So I would stick to their advice as opposed to mine.
Yeah. Here's an interesting question that comes to us from Angela W. Raoul, we're strong believers in crypto as macro and the exponential age, yet men we respect like Mike Green and Russell Napier firmly believe that ultimately governments will not permit competition to the sovereign fiat. How do you reconcile those two conflicting viewpoints? Boy, just what we were talking about.
I don't think it's all about money. It's the internet of value. That's why Web3 has become the narrative. So Bitcoin is a different beast and it's more of a reserve asset. Does it turn into a fully fledged medium of exchange and currency? Yeah, but that's not happening for 20 years. It's possible. I doubt it because governments want to own their supply of money for their own community, like everybody else is going to have tokens for their community. But, I think as a reserve asset, Bitcoin works. But what we're actually talking about is the way of storing, transferring, and recording ownership and value in the digital age. Governments are not going to get in the way of that. The president made it pretty clear that it's all fine. They just want to make sure it's regulated.
Yeah. By the way, really big news coming out of that executive order in terms of just the framework. I was joking that, the ultimate impact of that is that we have a bunch of government working groups writing reports, but it's the signal that it sends about some of the things, some of the wording we heard in that, talking about the future of money, talking about U.S. remaining competitive by being involved in these digital assets. Really interesting language.
Yeah, and I also thought they remember I've had a few rants about the fact that the SEC was trying to stop people participating in this.